Good morning, everyone. I'm going to be going over the data sets and earnings for the week of February the 24th. So we'll be going over the 24th through the 28th, and afterward I'll be quickly going over the SPY. Hopefully this video is a short video because there's quite a lot to cover, and I'm going to be making 4 other videos tonight, so look forward to those. Getting straight into the data sets. Monday, we don't have anything really. We only have the 2-year note auction. We've been seeing the yields pull down slightly. We're probably going to continue seeing the yields pull down towards April 2nd when Trump starts the tariffs on Canada and Mexico and wherever else he's going to implement the tariffs on. I believe China and wherever else. Tuesday, we have the CB Consumer Confidence at 10 a.m. Not really expecting too much out of that. We also have Vice Fed Chair Barr speaking at 11:45 a.m. Now that can definitely bring some movement into the market, as the Fed's been kind of in disagreement lately on their stance for what they want to do with QE and QT, meaning if they want to continue reducing their security holdings or um, expand on those. So that's kind of up in the air. He's been saying, him and Bolstick, I believe, have been saying that they are seeing QT ending sometime this year, sometime hopefully this summer, and we've been hearing from Goolsby that they're very likely going to continue selling securities for the rest of the year. So the Fed isn't in agreement right now, so every statement from them is kind of really important right now. We also have the 5-year auction at 1 p.m. Again, just looking forward to the yields pulling down slightly. Shouldn't be anything too major. Wednesday, we have the new home sales data at 10 a.m. I don't expect anything too crazy out of that, but seeing how we don't have a lot of data that, earlier in the week, that could move the market slightly if we get a weaker or higher reading on that. We have a Fed member, Bolstick, speaking at 12 p.m. Again, same thing for what I said about uh, Fed member Barr. Uh, kind of just have to be aware of what they're saying, and every bit of data and every statement from them is kind of really important right now, as the market is trying to determine whether we're going to be continuing QT for the rest of the year, cutting it off sooner, implementing QE. There's a lot in the air right now that needs to be solved. We have the 7-year auction at 1 p.m. Again, just expecting the yields to slightly pull down, nothing major. We don't have anything in the yields that's really going to cause it to move up too much unless we get some wonky data set. Uh, but everything should be pretty safe until April 2nd in the treasuries. Now for Thursday, we have the weekly jobless claims at 8:30. Again, I'm not expecting anything crazy out of these. I believe we've been seeing these pulled down slightly over the last couple of weeks, but I'm not going to focus too much on that. At 8:30 a.m. as well, we also have the core PCE prices and the GDP. At 10 a.m., we have Vice Fed Chair Barr speaking again. And we also have Fed member Bowman speaking at 11:45 a.m. that day. So Thursday's going to be kind of a busy day. We have the really busy pre-market, as we have quite a lot of data coming out at 8:30, and then we have the Fed members speaking later in the day, which can, again, that can bring volatility to the market quite easily. Now on Friday, we have the core PCE prices, the PCE price index, and the personal spending data all coming out at 8:30 in the morning. So in the pre-market, then we have the Chicago PMI coming out at 9:45 a.m. I don't really expect anything too crazy out of that. Uh, that's been slowly going upward, but we will see what that data set gives us. We have the Atlanta Fed GDP at 10:30 a.m. Again, not really expecting anything too crazy. We don't have any data sets that are major this week. Besides like the PCE stuff on Friday, most of the data sets are just going to be Fed members randomly saying something or not. And we should be seeing the yields overall this week pulling down slightly. As we really don't have a lot of data sets that could cause the yields to move upward. Now, quickly going over the earnings. For Monday, we have in the after hours, we have hymns, so hims and hers. And I'm not taking any positions on these. These are just the ones that people in the group are playing, and what I see a lot of options being put into, and what I think are decent movers or not. Like, we also have Riot on Monday, but I'm not really focused on mentioning it too much as the movement hasn't been great in Riot for a while. So, um, anyway, with that said, for Tuesday, we have First Solar, so FSLR is the symbol, and that's in the after hours. On Wednesday is a really huge day as we have NVIDIA. Everyone's looking forward to that. I am going to be making a full video in a couple minutes about NVIDIA, including some options to take for the earnings. That should be quite good. We have Snowflake, so Snow. We have Root, IonQ, Salesforce, so the symbol for that one is CRM. We have Marathon Holdings, which is Mara, MARA. So quite a big day for Wednesday in the after hour. Um, Thursday we have, let me scroll this down just a little bit so you can see. We have Sound, so Soundhound. We have Dell. We have Rocket Lab, which is RKLB. I know many in the group love playing that one. And then we have Archer Aviation, which is ARCH. Many in the group also love playing that one and do really well on it. So um, that was for Thursday. And then Friday we have TerraWolf, which is WL uh, or WULF for the symbol. Again, I'm not really going to be taking any options this week for earnings other than potentially maybe Snow and NVIDIA. I am going to be taking the NVIDIA options that I'm going to talk about in that video, but I might take something for Snow. We'll see. Um, Besides that, though, we have quite a lot of heavy earnings. I mean, NVIDIA itself is going to dictate whether the market is going to continue heading upward or whether we're going to, see a potential major sell-off as um, NVIDIA is the leader in the market right now throughout tech and everything, even though it may not be the number one in regards to total value, but it is definitely the major key player in dictating the market movements right now. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And with that said, let's go ahead and quickly go over the SPY. We had a pretty big sell-off on Friday last week, but before we go over that, let's go over the daily moving averages, the Bollingers, and the ADL. So for the moving averages, let me just expand this a little bit. We have the 5 mile at 608.89. Currently, the market is at 601.85 and it closed at 599.94, which means that the 5 mile is probably going to open around 604.97, which means, our short-term support is above us. We have the 10 mile at 606.85, the 20 mile at 604.95. That would be very much in line with where the 5 mile would open. So it's very likely we're going to see the 5 mile pulling down towards the 20 mile quite significantly. We have the upper Bollinger at 613.33. For now, that's kind of out of range. we shouldn't be looking towards that at all. And then we have the lower Bollinger at 596.58. That is pretty close to us, and if we do see some major selling, like if NVIDIA doesn't meet the earnings expectations, then very likely we will pull down to that lower Bollinger area. And just quickly going over the ADL while we are in the daily, we did have a big dip as we did sell off basically the last two sessions. We can continue the sell-off a little bit. I'm not expecting it to continue too much further though, and I will show you why by going over the hourly chart. Let's go ahead and hide the Bollingers and the moving averages though. We formed a really nice inverse cup here, and I'm going to show drawings. This is the top of the consolidation channel. We've been in this since November, so it's not an arbitrary line, I promise. Anyway, I'm gonna pull out the drawing tool, and I just want you all to see this large inverse cup that has formed here, and now we can potentially start working on a handle for this cup. Now, I'm not drawing this to a specific level. I'm not saying that this 607 is going to be the top at all. I'm just trying to show the cup. You know, this cup can be a lot shorter than that. It can be something just like down here. I mean, it can go all the way back up to the top. I mean, we have to just play it session by session and see how the structure holds. But on the... Ooh, I don't want to delete all the drawings, hold on. Sorry. Okay, but anyway, we should be looking for a bearish microstructure here, and potentially we have, you know, a head and shoulders forming here, which can absolutely form this handle on this inverse cup, which again we should expect kind of like another cup to form in this area, and that would give us the liquidity to pull downward. So if we're going to continue heading bearish, then that's what I would expect on the downside, is for the ADL to continue moving downward and for this nice structure to form to signify that selling is going to continue. However, if this selling doesn't continue, what we should be looking at is for this cup to form here, and from this cup we should expect a handle and then the breakout. And if that's going to form, then what we should be looking forward to is very likely some sort of inverse cup, or I mean inverse head and shoulders here. So this would pull down, probably test the bottom Bollinger, pull back up to the 5 mile, and then head to a breakout, finish this cup out, and then, you know, we go from there. And while we do have major selling going on here, we still have a decent bullish structure. And let me show you in the 4-hour chart, because that shows it a little better. But technically this is still a cup and this can still be a handle. So essentially right here, there's the cup and can be forming a handle. So this could be forming a large breakout upward still, but again, we are heading in bullish territory. We're underneath pretty much all of our support right now. We're heading towards the lower Bollinger, so it is expected that, you know, this selling will continue throughout this week, but we're put in a position to where we can head upward and break out of this bear structure pretty easily, but the dealers can continue to sell off if NVIDIA doesn't do well with their earnings. And what I'm really expecting is for, hold on, let me hide the drawings. What I'm really expecting is for us to kind of consolidate the 5 mile and the 20 mile together, so that 604-ish, you know, 605-ish area should be, you know, support should build up in that area, and then by then that should probably be when NVIDIA has its earnings. we have, 3 sessions until then, so it's a little too soon to be dictating whether we're gonna break up or down. But um, just use this 5 mile and 20 mile area as a place for straddles because if we do head upward, we have a ton of room above us. I mean, ignore the 5 mile right now. The market's essentially going to be in this 601 to 604 range, which means that, we have basically $9 plus above us and $8 ish to $10 ish below us. So there's plenty of room to set straddles and have them do very well. And what I mean by a straddle, I know a lot of people who watch my videos and stuff don't know what those are yet. That's taking a call and a put, and a straddle would be either an in the money or at the money option. So for example, say we're at 600, you take a 600 call and a 600 put for the same duration, and then you just sit on that and wait until the move happens, and then you cut the loser and ride the winner into the next leg upward or downward. And that's how I like to play a lot of these moves once we get to the 5 mile and the 20 mile, because how I like to think of the 5 mile is basically that level gets tested once every week. The 10 mile gets tested once about every 2 to 3 weeks, and then we have the 20 mile, which gets tested about every month, month and a half. So once we do reach these levels, it's really good to set up on them, and they can, pay really well. So on tomorrow on Monday the 24th, I'm going to be opening straddles very likely all the way for the 3/14-ish expiration. So that's, March 14th ex expiry. With that said though, I'm gonna go ahead and end this video here just because there's quite a lot to talk about in my other videos, and yeah, there's just a ton to talk about. So, trade safe, have a great day, and I will see you all in the next video.